So this is why the GBPUSD trade was not it. This was a problem. After much analysis, you come to understand that the trade was not even valid in the first place. So this is the 4-hour candle. As you can see, a break of structure was formed here and the market retraced and created another break of structure, creating an higher high. Now, the whole point of this strategy is to buy when the market has stopped retracing, to buy at any discount price. So you bring out your discount tools, you draw it from the top to the bottom, from the swing high to the swing low. So any demand zone you can find between this range, the discount range from here, you can see where the cursor is from this point to this point is where you should find and look for your demand zone. And one solid demand zone you can see on the 4-hour candle is right here. Here is a 4-hour demand candle, demand zone. You can see it. So immediately you have plot out your structure, you know where your high, your swing high is and where your swing low is. You drop down to the 1 hour. Now this is the 1 hour candle. This is what the 1 hour look like. So all you have to do now is to restructure your demand zone in the 1 hour candle. So if you look closely, you see exactly here, this candle is the candle before the outbreak. You mark it down. I don't usually use 4-hour demand zone. I just use to plot out. So immediately you have plot out this demand zone, all you need to do is to wait for the market to come to this demand zone, which the market did here. You can see this is where the market came in contact with the demand zone. Immediately the market comes in contact with the demand zone, all you have to do now is go down to the 15 minutes to look for a change of character to the upside. So let's go to 15 minutes. Now, this is 15 minutes, and immediately you get into the 15-minute candle, the first thing you look for is your structure. Try to understand the lower time frame structure. So if you look at the structure, you see you have a downtrend, created a lower high, then lower low. From this, you already know the last swing high on the 15-minute candle. And the last swing high is this place. You mark it out. This is the last swing high on the 15-minute candle. Then you wait for the retracement at this point, this retracement. Immediately the market retrace a little bit, you mark your last swing low. And your last swing low at this point is this place. Here is your last swing low. So your 15 minutes swing low swing high and 15 minutes swing low. Let me change this to 15 minutes swing low real quick. Swing low. So this is it. Now all you need to do is to wait for the candle to close above this place. So you wait for the retracement to cross this place. this swing high. That's all you need to do. And when did that happen? It happened right here. This was the point where it broke the 15-minute swing high. This is a change of character, or what I call market shift. This is a market shift. This is what you are looking for all this while. So now this is a market shift. A 15-minute market shift. This is a 15-minute market shift. So this is the market shift. 15-minute market shift. Market shift. 15 minutes. So now, after you have spot this market shift, you now need to find the points that made this market shift come true. What pushed the market? What pushed the market to break through this swing high? And if you look closely, you see that it was this point here. Here's the origin that pushed the market to break the 15-minute swing high. Now, this was a mistake. According to the strategy, this is what you're supposed to do. You're supposed to wait for the market to come back to this point, then you buy. Get my point? You wait for the market to come to this point, then you look for buys. But this is where the trade all went wrong. Instead of me waiting for this 15 minutes order block, I was looking at something different. I was looking at this. That was the problem. So now I drew another block at this point here. Instead of waiting for this, I was looking at this. I even drew a market shift here. You see the mistake? I was looking at markets differently. So all this movement, are retracement. All this up and down, you are seeing. So when most people say, oh, hello. No. This whole move down in 15 minutes is retracement, and you just need to tap into this other block and go up. That's it. But so if I had waited a little bit, the news would have moved very rapidly. I would have not taken a trade. This was a great mistake. This was a mistake here on this trade. I looked at the market differently, wrongly, and this led to the loss on GBPUSD. So that's for that.